Hi everyone, this is Rob and I'm back today, July 19th, 2018 for another edition of Current News and Analysis. So there's been some pretty big developments come out recently in the world currency markets, which is what I wanted to talk to you all about today. There was an article that came out on July 2nd that was reprinted in Goldcore on goldcore.com from James Rickards about how he believes that China is now controlling the price of gold and how they're doing it. And there's actually two articles that came out that kind of seem to paint the whole picture of how China has done this. China apparently has been intervening in the SDR price and the gold price to peg them together, which allows them to control the gold price in terms of dollars. How does it allow them to control the gold price in terms of dollars? Well, both the Yuan and the US dollar are part of the basket of currencies that support the SDR. So what is the SDR? The SDR is a special drawing right that is provided by the IMF, which is the International Monetary Fund. Essentially, the International Monetary Fund is like the world's super central bank that supports governments and their central banks across the world, especially across the Western world. And by inclusion now of the Chinese yuan into that basket of currencies, China has the ability to use their SDRs and any SDRs that they can trade for in the open market to then influence the value of gold in terms of SDRs and therefore the value of gold in terms of US dollars. A brilliant scheme to sort of slide in sideways and control the gold market and take the control of the gold market price away from the Western central banks, which have been intervening in the gold price primarily through the COMEX Western gold market for years and years and years. And China has made just a stunning bid to take control of the gold price there. So how did they do it? Well, as Jim Rickards goes to point out, well, I'm going to show you the chart first. Since late 2016, you can see this line indicates that the gold to SDR, gold to SDR shown by the green line, has been relatively steady. So that's basically a peg. That's saying that gold and SDR are moving just about in tandem over time with one another in a very, very tight range, as we can see here, from about 850 to 950. Before this apparent peg took place, before late 2016, you could see a much wider range in terms of gold to SDRs before China was able to use open market operations in both the gold market and in the SDRs to peg the price closer together and control the gold price. Jim goes on to explain how they could intervene in the markets to do that, but I wanted to take you forward to another article written by David Brady, who's a chartered financial analyst, which was printed in Sprott Money's blog, and it shows how China is taking control of gold from the COMEX. He goes on to analyze the 2016. Basically, you can see how the gold SDR is trading in a very tight range, the same way that James Rickards pointed out from research from DH Bauer, in about an 875 to 940 range. And that tight range is basically the effect of a pegging, or pretty close to a pegging. And through that, he was able to price out gold in US dollar terms. And you can see that the high is 1387 US dollars and the low is 1131. Well, the gold price since late 2016 has been trading in a range from about 1124 to 1377. So apparently China using the SDR and manipulating the gold prices using their new gold market that they opened recently is allowing them to control the price of gold in US dollars, which allows them to basically buy as much as they want within that trading range. It allows them to add to their gold reserves, therefore making their yuan currency, which if they back it by gold, which many think that they're in the process of doing, which would make the yuan a strong contender for world reserve currency, or for a world trade currency at the very least, to rival the US dollar and eventually the SDR. Many people, including Jim Rickards, believe that the Western central banks are planning to replace the US dollar when it eventually fails, as it will, with the SDRs released by the IMF. And maybe the SDR is the base currency instead of gold, and the US dollar and other Western currencies are then revalued at some rate and it would be controlled through the SDRs, and maybe only backed a little bit by gold, therefore allowing the Western nations to continue to manipulate the world reserve currency through the SDR and through the supporting basket of currencies. China apparently has been making moves to counter that. So the analysis by David goes on to show the gold to Yuan peg since 2016, as you can see here. Let me click on this chart to enlarge it. Since 2016 has come into a very tight trading range. As you can see here, before that there was a normal up and down that you'll see in a currency pair. One gets stronger, the other gets weaker, the other gets stronger, and that one gets weaker. Well, now it's trading in a tight range. This is in effect creating a peg or a price range, as close to a peg as you can get in a pair between a currency and gold. He also went on to show that since the same time frame in 2016, you can see that there has been a very tight range of the US dollar to the yuan, which allows China not only control the price of gold, but control the price of US dollars. Because remember, both China and the US dollar are part of the global basket of currencies that the SDR is valued on. So China can control the currency movements of the US dollar. Well, what is the significance of that in trade? Well, if you think about it, as each country devalues their currency more, it makes their exports more attractive to other countries, and it allows them to export more and therefore have a positive trade balance or current account balance, meaning they're getting more dollars back than they're sending out buying imports. And this allows them to become a creditor nation and allows them basically have a control in the relationship. Why China has had more control over the U.S. relationship in terms of trade is because they've had cheaper and cheaper exports than the U.S. has, and so that's allowed them to grow their manufacturing in their country, thereby making it stronger. The U.S. recently has been implementing tariffs to make Chinese export basically more expensive and to make U.S. exports more attractive to China to try to resolve that trade balance. And so China can fight back by doing the same thing. They can also place tariffs on U.S. goods to make them less attractive, but that only allows a certain range of retaliation. And because the USD would seem to be the stronger in their ability to apply tariffs than China. China, because it's not the world reserve currency, can only do so much in tariffs to counteract what the U.S. is doing, and they would eventually lose that battle. So what they've done instead is started to intervene in the currency markets to control the U.S. currency so that the U.S. cannot devalue their currency more than China can, which will basically ensure that China is going to have the better of the trade relationship. And if China can get the better of the trade relationship, it means that they are the creditor nation to the U.S., they're loaning money to the U.S., and the U.S. can't basically control the value of their currency. It allows the Chinese, therefore, to also force more U.S. dollars into the market, thereby weakening the U.S. dollar overall. And it allows China, through backing their currency with gold, to become a much more attractive currency for trade. And if they can do that, they would become a de facto contender for world reserve currency. And that's basically a lot of information I've kind of thrown at you. But the significance of this can be boiled down to, it was the Western plan for currencies was seen as replacing the U.S. dollar's world reserve currency with the SDR through the IMF. China now is counteracting that by saying, well, we want to be a contender. We don't want to be controlled through the Western currency system. We want to make the yuan a contender in trade and therefore control our own destiny. While we're backing our currency with gold, so by controlling the current gold price, we're able to get more gold at a cheaper price and not allow the price of gold in dollars to rise too much. And it also locks in that current account surplus they have in trade with the U.S., which locks the U.S. into not having a lot of options for really improving their economic situation domestically, and strengthens China's position, even though they're still devaluing their yuan. Because even though the Chinese are printing more yuan, right now the yuan and the dollar are valued in terms of trade. So if China can stay on top of that relationship, they can continue to build their manufacturing base. And then as they accumulate more gold and the USD starts to suffer internationally and starts to reach its failure point as a world reserve currency, China can then come on the scene with a much stronger currency backed by gold that can compete with the US dollar, the British pound, any Western currencies, or the SDR issued by the IMF. China now basically is saying the Western central banks don't control the world anymore through their monetary policy. That's the significance of all this, and it allows China to control their trade surpluses that they currently have and protect them with the United States and other Western nations. So that was quite a bit of analysis there. It's great work by D.H. Bauer and David over at Sprott Money to put this together for us, but it really shows that China is getting smarter in dealing with the U.S. dollar and the Western central banks and the IMF, and allows them to be to continue to build their economy and be a strong contender for a global trading currency. So basically, this is indicating that the world currency reset has already begun. China's already started to take control of SDRs, dollars, and gold through open market operations, and that basically means that they have some de facto control of the world currency markets. Now, they haven't replaced the US dollar with the Yuan, but they're controlling the moves that the Western banks can make, and while also buying gold, which is going to make them a stronger economy and a stronger currency choice in the future. So I think we're now in the reset. I think it's possible that the U.S. has already defaulted on their debt with China, that China basically has taken some reparations from the U.S. for that, or they've been buying a lot of real estate. They're gobbling up a lot of property in the U.S., and now they're starting to control what the U.S. and central banks can do with their currencies. And when you can control what a central bank does with their currency, you can control international trade, and you can control how much power those central banks have. And I think China's really breaking out of that old U.S. dollar system and really maybe preventing the SDR from becoming a global world currency and breaking the cartel of Western central banks. Just an extremely important development. What this means long term, what you want to do is you want to dump U.S. dollars. If you're holding U.S. dollars, get rid of them. If you're holding investments valued in U.S. dollars in terms of other paper investments, get rid of them. Go to gold, go to the safety of gold, go to the safety of farmland that holds its value during tough times. Get out of a lot of your paper contracts and paper securities denominated dollars, and get out of dollars that you hold in the U.S. banking system, because it looks like the dollar is eventually going to go away, and maybe the Chinese yuan becomes a strong contender for a reserve currency or a trading currency, and that will weaken any U.S. dollars that you have. And it weakens the power of the central banks to revalue the dollar, to control the revaluing of the dollar. Thereby, when the U.S. dollar is revalued and the Western currencies are revalued, which they will be, they'll probably come in weaker revalue, which is why you want to dump your dollars now while you have the chance. Okay, guys, that's the update for today. I'll go ahead and wrap it up, and we will speak to you next time. Have a very good weekend, and I will see you next week.